All righty. Good morning, traders. Good morning, Bran. He said good morning to me, so I'm just saying good morning back. Hope everybody's doing well. I'm actually going to be chatting with Mark Chandler today from Bannockburn. And so I had to actually take a shower and kind of get ready just because it's an early one this morning for me, and I had to kind of beat the house before they even got up. I wanted to get around and get all ready before everybody started to, it started to get busy in our household. Let me just put it that way. But the good news is it doesn't look like I missed a whole lot. I was just looking at the Euro New Zealand, making sure it wasn't breaching new lows down here. I still think this is a possible false breakdown. The problem is that we're being influenced by the euro right now. But I was looking at it like this. So right. So just making sure that we stop here around the 161% extension. I don't want to see it really exceed that low right there. But we'll see as long as we can get past this press conference. And right now, obviously the press conference has been moving the market. But the euro, you look at the euro itself, and we're just kind of consolidating. And I have to say, I'm not excited about anything that's happening here. One of the things that I was looking at earlier, just before just as the morning edge was wrapping up, the FA.C.E webinar was wrapping up, is I was looking at Bitcoin, and Bitcoin was just, breaking through some support, and then all of a sudden it just ripped higher. But then you saw the same thing happen in gold too. Gold was selling off, and then it bounced back, and silver, same type of price action, which you can just see it's actually the inverse of the euro. So, the fact of the matter is I think we're going to be taking our cues more from the dollar versus these other markets. Matter of fact, since we're on it, let's go ahead and talk about gold and silver and where we're at. So silver broke this channel here. We're testing the 38% retracement. So if you go to that was the 4 hour. I thought that was actually the daily. So let's go over to the hourly chart. So here's your hourly chart. I sent an update about this morning. I think the risk is you can press back up to this support previous high right there. You got a little spike high right around here, but this 2446 is probably going to give us some, resistance. We're just going to be, in range here with the silver market, but you have to also imagine that there's this downtrend line here. So actually what I'm going to do is I'm actually going to give that a little bit further up to the 78% retracement, which will be that trend line, because that trend line is significant. So 2465, and then I'm going to put support as right now these lows, which will be 2380. So I know I'm throwing some of you guys off. You're like, wait. You usually do currencies first, and now you're doing silver first. I just happen to be on silver. So, and I'm going to do gold while I'm at it. Then we're going to go into the euro. So here's gold. Notice how, remember we talked about this broken trend line, and I believe yesterday we put in support at 1785 or 1790. 1790. So 1790, we were thinking, oh, this is the trend line, right? And so I guess my mistake here was that I didn't adjust that line as well as I should have. So that spike low was I'm looking at 1782. Okay, so 1782. So basically, you can see this trend line still supporting, but what I am going to write down is 1770. And then I'm going to write resistance right now is, we can probably write 18 couple levels. So 1770. This is key. I'm going to say this is resistance on rallies. I want to call it 1805, then 1835. So 2 levels, right? I'm going to ask you guys this. Hey, Peter, how's it going? I'm going to ask you guys this really quick. How many of you guys, who's a dollar bull and who's a dollar bear? Say, I'm a dollar bull, I'm a dollar bear. If you don't have an opinion, you don't have an opinion. It doesn't have to, if you have a strong opinion, say, I'm a dollar bull or I'm a dollar bear. So just so I want to point this out. $18.05. Oops, sorry, that's 1830. Okay. Bull, bear, bull, short term, bull, undecided. Okay. So and that was basically a few of you guys, like less than 15%. That's fine. Here's the reason why I say that. Watch gold. Okay. If gold breaks this level right here, that means yesterday's lows, or you could just say, you could probably say 1780, 1790. Gold starts breaking through that low again. That's going to be very dollar bullish. Okay. If gold finally breaks, well, you could actually say 2 levels from where we're currently at. If gold breaks through 1805, 07, that's dollar bearish, right? So this watch gold today, because I think gold's going to tell you what to do, or it's going to help confirm what to do based on your ideas. And again, I'm not going to say you should be a dollar bull, you should be a dollar bear. Personally, I'm more of a dollar bull at this point. The reason why I say that is because I think equities are, topping here. I think we're starting to see the cryptos are starting to peak a little bit. Gold and silver aren't really going anywhere. I keep thinking there's going to be a blow off top, but then, I've got, currencies like the dollar Norway that's looking better, and dollar Mexican peso still basing. So I actually think that stocks, I'm starting to believe that stocks might be actually not going to give us that blow off top, which sucks. I would wait, and I can do this. I would way rather, and I'm just telling you guys this right now, I would way rather see this, and then, this for the next couple of years. I don't know if that's going to happen right at this point. What I'm thinking is going to happen is we're going to see this sell off a little bit, then, rally, and then, whatever happens after that. But if we get a sell off here, it's not going to create as much volatility. I want volatility. That's what I want for you, me, for everybody. So anyway, I guess the reason why I'm telling you that is because I'm feeling less optimistic about a continued bullish move in the S&P, which makes me more of a dollar bull at this point. So anyway, that's why I think you should watch gold, because gold today should give us some better clues on what to be doing. All right. Speaking of which, since we're on the S&P, all right. So notice how that 4,500 level held yesterday, right? I know we probed below it. I mean, this is obviously all very key. I'll write down the lows here, which came in at 44.86. So we'll do 44.60, which is key. For 44.85. And then resistance is 45.50, right? And then 4,600. And literally might be the only thing on our bias chart that has a bias. As sad as that is, right? Okay, let's go take a look at let's go through currencies. So here's the euro. All right, so obviously we're range bound, and I'm gonna assume at this point, well, hold on really quick. Let me do something really fast. That's right. Hold on. That is basically okay. So resistance here is going to be at 118. I think you got to give it up to 118.50. Support. I mean, I'm going to write down the channel low. So even if we hit new lows, like let's just say some dollar strength comes out of the woodwork for whatever reason. I'm still not expecting a lot of downside in the euro. Just, if the dollar, like I'm talking obviously just today, if we see a little euro sell off like this, I'm just expecting the euro to just trade down to 117. What is that? 117.85. It's a 50% retracement. I'm not expecting fireworks today. So, and we're in a range environment. So since I've got you guys here, let me just make sure I explain this to you really fast. For those of you that are still have a hard time grappling with this idea, I just want to make sure you guys all understand. The bias is not necessarily, oh, you should be trading bullish or bearish for the day, or, oh, it's range, so we're just going to do nothing. No, that's not what the bias means. The bias means what is the general direction of the currency pair. It should help you judge how aggressive you should be. Like, for example, if I have the cable as bearish, which it won't be today, but let's just say it's bearish. So if it's bearish, but it's going higher today, I might still go along the cable. I'm just going to take a smaller position because I know it's got a bearish trend and I'm going long today, right? Now, the flip side is, like, let's say I'm going, the cable has a bullish trend and I'm going long today, and I know it's in a bullish trend, then I'm going to probably be a little bit more aggressive. I'm not, instead of buying one lot, I might buy two, right? Or instead of buying two lots, I might be buying three, because I'm going in the direction of the trend or the bias, if you will. All right. So that's why I put bias there. It's not saying, oh, buy the S&P, it's going here. That's not how we use the bias. The bias is, those are going to be upside targets in this trend should we continue higher, and it's in a bullish trend. So if you're going short, just be a little bit more careful. All right. That's really how we use a bias chart. Sterling, let's talk about that, matter of fact. So what we are challenging is the underside of this trend line, right? I actually think that the sterling stops here. I'm not going to short the pound. I have euro sterling long, so that's enough short exposure for me, right? I don't need to be shorting the pound too. But if I did not have a dollar position and I wanted to be short the sterling, I would probably sell it here with stops above this resistance. This is the underside of this trend line. I think it's going to end up failing here. So I think resistance is going to be 138.55 from 138.55. 138.55. By me saying fee 505, did I bring back any childhood memories for you guys? 138, we're just gonna go 139. range bound. Support. I think support's going to be on dips. I mean, obviously, we had a false breakdown yesterday. That was the risk, right? The risk was higher prices today. I think I mentioned that last night in the analysis. Buyers came in on the dip below 50% retracement with the pair closed well above the 200 DMA, resistance above. No, I didn't put in the false breakdown. I must have been thinking it. So, you know, we did. Very slight though. Okay. False breakdown. Oh no, we were talking about it in the chat room intraday. That's what it was yesterday in the chat room, I believe. Or it was the daily roundup, right? We got this little false breakdown here. And guess what? It squeezes as a result. So that means this is pretty key support on the way back down. So 137, let's just call it 137 and a quarter. Pretty key, and we're range bound. Okay. Aussie dollar. So 38% retracement is finding support. That's going to be 73.35. And I would believe any 73.35. And I think any move to 74.20 is going to be sold. So, yeah, should we get up here? Fantastic. Fantastical. I think you sell up there. Right. Kiwi. Now, you know, I need to point this out with the Kiwi. First of all, we're back at this downtrend line, right? 200-day moving average. I have to point out that the pullbacks have been very shallow. That, I mean, I am short the New Zealand through the Euro New Zealand. So it does concern me. I'm not short the New Zealand dollar straight up. So I'm not worried about it as far as the Kiwi dollar goes, but I am being short the New Zealand in general does concern me, given the fact that this is very, very shallow retracement. That means this 38% retracement is going to be pretty important should we get down here. Look, we can't even pull back 24% of this move. That is a concern. Like if you're bearish, that's a concern. So 70.31, 71.70. Actually, I think this resistance here is going to be important, but I'll write them both down. So this is today's high, 71.35, 71.70. We are in a range, but you know, like the Kiwi for the last month or two has had more of a bullish. We've actually flipped that to bullish on many occasions over the last 2 months, right? We happen to be in range right now, but you know, the Kiwi has been acting better, especially as the Antipodean type of currencies, right? So 70.31 is support. So 70.30, dollar CAD, false breakout yesterday. You know, last night it was trading above 127, and I thought about this last night. I'm like, I should be shorting this right now. I didn't, but I was thinking about it last night. My son had goalkeeper practice, and then after that he had to practice, and it's 105 degrees outside where I live. It's still hot as can be. Anyway, I was walking, like speed walking around the park, and I saw the dollar Canadian trading above 127, and I'm like, man, I should be shorting this right now, and I didn't, like a wussy. But man, that is important to see this. That 618 is going to be really. You can see how we got sold ahead of that number. So that's going to be important resistance. 127.75. The good news is if we ever clear that would be bullish, but right now it's not. So we have Canadian jobs report tomorrow. I believe. Hold on. Yes, we do. We have Canadian employment. So, I don't think you should be too aggressive with this one, I guess is the point I wanted to make here, knowing that I wouldn't be too aggressive with trying to be bullish the Canadian or bearish the Canadian. This should offer some support today. I mean, you can see these little spike lows down here and spike highs right there. So this is just going to come in around, let's call it 126.35 ish. If you are a dollar Canadian bull, which by the way, I don't have any Canadian exposure right now, but let's say you're a dollar Canadian bull and you're like, wow, stocks are just ripping higher again this morning. Let's say you want to be long the dollar Canadian ahead of tomorrow's jobs report, then try to pick it up down here. Try to pick it up down at some support. Try to pick it up down here, and maybe you get lucky, you get a little bounce back near 127 ahead of tomorrow's jobs report. I might actually put a bit. You know what? I'll give it a shot down there. I'm going to put my order out there for the next couple hours. I'll give it like the next 6 hours or so. I'm going to buy it at 126.30. I'm going to try to get long some because I wouldn't mind being long a little ahead of the jobs report. Okay. All right. Swissy. So we talked about this yesterday, the risk of it failing just like the dollar yen, and it did, unfortunately. I say unfortunately because, boy, it'd be nice if we had anything moving, but, anything trending. Let's just put it that way. So resistance is at 92.40. Support's going to be right back here at 91. So that sucks. That sucks. Speaking of which, let's just go to the dollar yen because same thing, right? That's why we talked about it yesterday about the Swissy. I'm afraid this is going to happen to the Swissy. And that happened. And now the Swissy's heading down here. It's like the Swissy is tracking the yen, or, we're tracking yields. And rather than getting bearish down here, because I got sucked into that last time, let's just keep this. This is our range right now, right? That's what we should be paying attention to. 109.55, 50, 109.60, 110.40, right? So actually it's 110.45, 110.45, 109.60, and that's it. Dollar Norway. Let's just write this down. 862, 873. We do have, actually, I'm sorry. We do have to continue to put this in bearish. We do while we're below here. I'm just, you guys know my stance on the dollar Norway. I can't believe we are where we're at right now. Stocks are ripping. This thing should have already completed the double top already. We're at all-time highs in equities. I'm scratching my head saying, why isn't this thing lower? I wouldn't mind actually shorting it if we broke down, but we can't even get below the 50% retracement, which when you're talking fibs, when you're talking fibs, you got, for those of you that have listened to my Fibonacci videos, you already know this. If you haven't, go back and listen to my Fibonacci videos. You can even look at the free ones on YouTube right now. When you're only getting a 50% retracement, that still builds the case that a trend is there in development. Once you get past the 618, that's when I start thinking range. So in other words, because the 50% retracement is holding, I still think that this is possible. If we held if we went down to the 78% retracement, complete this double top, I would be thinking we're in a range. But given the fact that we can't even get past the 50% retracement, suggests that we're, that the risk is that we still continue higher here. Okay. I got to move along because I got interview here very shortly. Dollar Mexican peso support. I mean, look at this damn thing. This is another one that, gotta be a little skeptical here of being too bearish or bullish risk when you got the dollar Mexican peso can't even go down. Support 1983, resistance 2003, right? Because we got to make it past this stuff. $1983. What a good year. Oh, to be 11 years old again. That'd be awesome. Were you born in 1983? No, you were born in 80
flat. That's it.
80
yes.
Flat. 80 flat.
I think that makes me, if I remember right, the very last of the X-Gen. I
don't know. I don't know. Dollar index.
So I'm, I'll be I'll be considered a boomer or so.
Am I considered a boomer?
For sure.
I am?
No, we're not boomers, man.
Oh yeah, we're the next generation.
Yeah, whatever.
Right. Yeah.
We're just old guys.
Yeah, but we're going to be the equivalent boomers for the next generation, though. Keep that in mind.
Of course. 92.85 support's going to be right here, which will be a retest of this trend line. So 92.85, I would say 92.30.
Yes, between 65 and 80 years of birth, Generation X. So I'm barely there.
Nice to have Google at your fingertips, right?
But you see, I remembered without checking Google.
Oh.
I just confirmed.
With Google.
With Google, absolutely.
Got it. Okay. That's very, very much like my wife. I'm like
boomers is.
I'll make a statement. She's like, "Are you sure about that?" I'm like, I think so.
Boomers,
Google. It's a Google. It's a Google
boomers
search.
Are the people born between 46 and 64, by the way.
Yep, that's not us.
Yeah.
43.6 is going to be, you know what? It's actually just
now that I realize I belong in the same generation with you two guys, I really feel old.
Screw you, Steve.
You know what? You should, because I feel very, very old then. I mean, I felt older already, but now I feel a little older. Resistance on any rally now. Let's I mean, looking at Bitcoin, here's the way I look at it. If I was stuck long, right? If I was long Bitcoin, which I'm not, but if I was long Bitcoin, where would I want out right now? Would I be happy if it got back to 50K? And I'm just talking from a trading perspective. My opinion is, hell's yeah. If we got back to 50K, sell me some, right? So I think that that's going to offer, because it's a big figure number, it's going to offer some resistance. Obviously, 52K will be bigger.
Coincidentally or not, Blake, I had a whole rant about exactly what you described now yesterday. Meaning I said that in normal markets, after this sharp of a sell-off, people would be looking, both people that have been in the money and people that bought very, very late and found themselves immediately out of the money would be looking for opportunities of any rebound to just, bail out. But, among all that, I also said that, with Bitcoin and cryptocurrencies, you can never be certain, right?
Yeah, right. Exactly. Hey,
if it was any other market.
I got to read this for you. And by the way, Gear used the Q&A panel. Well, you guys, just in the future, use the chat panel if you can. The chat box, it's a little different. There's a chat box and there's a Q&A. I think it's silly that there's two, but for us as a small group, just use the chat box, right? So this,
I can tell you the reason that there are two of them, Blake, is because they are supposed to serve different purposes, and on specific events you can completely block out one of them.
I understand that, but like I said, since it's a small group of us.
Yeah, true. In any case, I always open both. So
Okay, I don't always open both. I always have the Q&A open because it's more of a private chat between us and the other traders. Mm-hmm. That's why I'm saying in the future, just use the chat, because that's what everybody else is using. There's a couple people that use the Q&A. Gero is one of them. And he said, regarding the US dollar Norwegian krona, there's an election coming on Monday. The fear is very left-wing government, which will be in favor of closing. Hold on, let me pull up the
oil production due to environmental issues.
Closing closing oil production due to environmental issues. That's not good for Norway or the NOK, and that's a good point. So so let's all keep an eye on that going into Monday, the election. So maybe some volatility might come around Norway. All right. Anyway, I'm going to leave it to you guys. For the rest of you, have a great one. Steve's going to take you through, and Stelios will take you through some of the other instruments. I'm going to go get prepared for interview with Mark Chandler, and then I'm also going to be interviewing Eric Basmajin from EPB Research. Yeah, he's really knowledgeable guy. He's worked with Lynn Alden before. He's very, very sharp character. And so it'll be interesting to hear his take too on the Fed coming up. So you guys have a great one, and I'll talk to you soon.
Perfect. Looking forward to this interview.
Thank you.
Bye-bye, mate.
Okay, so markets following the ECB presser have not done much. I wrote down a few headlines. First of all, they revised the GDP growth forecasts. 2021, they've put it up to 5% versus 4.6 before. And they are intent on giving us forecasts for 2022 and 2023.
Yeah, okay.
I mean, it's okay.
2030 as well, right?
So they moved 2022 0.1 lower to 4.6%, and 2023 the same at 2.1% for whoever likes to look at that. Lagarde did say she expects inflation to rise further in the autumn, and that's one of the cleverest things she's actually said recently. Now, the other interesting thing, they also said that the ECB is going to reinvest maturing PEP bonds basically at least through the end of 2023. So basically, the portfolio size will not decrease, right? They're going to be reinvesting it until the end of 2023.
And guess what? By the end of 2023, there will have a very decent reason, whatever that is, to postpone that or even increase purchases significantly.
That goes to the next thing I was going to say, which is the next headline that was made, which is that the ECB is to reinvest QE debt for an extended time after the first rate hike. So anyway, this is what they're telling us that they're going to do. What they are going to do is it might be
It's
completely
like
different.
me announcing you what I am going to do after I persuade Michelle Pfeiffer in her 30s to become my girlfriend. Doesn't really matter. It's not going to happen. So yeah, sure.
First
I can have a plan for it, but
so first
yeah.
you invent a time machine, and then she
Exactly,
agrees. Yeah.
exactly,
So,
exactly.
okay, yeah,
exactly.
Anyway, that's what we got from Lagarde and the ECB, which was, I want to say it's on the dovish side overall, but the markets are not actually doing that much. Like the euro dollar is maybe down 10 pips from the ECB decision, so really nothing. And the only difference from this morning is that equities are now positive. Surprise, surprise. And
Nobody would have seen that coming.
Bitcoin is as well. And but otherwise, metals are also trying to rally again because they got, after the ECB, they got a little bit of a push lower, but now they're back up. And
same thing with crude oil, Stelios. Crude oil, literally, still during the morning edge, it was at the lows of the day.
Yeah,
decently lower, and it has already pared back almost all its losses. So crude seems to be recovering.
China wrote, I saw a headline, China are going to release some of their reserves, oil reserves.
Okay.
Try to curb the price. And it's funny because whenever I see these headlines, I'm going to release reserves and all that, yes, you get more supply in, but you are basically losing one of your weapons, right, to control the price. If you
that's the first thing, which you're exactly right about it. But in my opinion, there is also another thing. You acknowledge that there is a problem, and usually, the market immediately focuses on, okay, so we are there, right? Okay, so crude oil seems seems like it's going higher.
Yes.
The initial response might be like a slight pullback, but usually post that, I'm not saying it hasn't happened. I'm sure it has, but I really don't remember at all recently any announcement for releasing strategic reserves leading to a reversal in crude oil price. I mean, it can lead to a little bit of a pullback, but to a reversal, I don't remember happening.
100%. Yes. So all in all, it was a pretty disappointing ECB. They didn't give us much. It was slightly on the dovish side, and the markets said meh.
Yeah.
And moved on.
Yeah.
Tomorrow we have PPI in the US, which, these inflation metrics are now becoming important, or more important. We're expecting 8.2% year on year. And on the core PPI, 6.6%. And I don't need to tell you that this is the largest print. Let me check the timeline. Well, it goes back.
I'll tell you.
2011. 2011. It's not. Yeah. So it's
forever. It's the largest print ever.
Yeah, it's transitory though. So let's wait.
Yeah,
and see
but it doesn't matter. It's okay. The fun part is that Powell had said had talked about in the online Jackson Hole symposium that are like focused mostly. First of all, he displayed once again how he's completely clueless having to do with economics, because in essence he did a flashback and he said that inflation in the 70s was mostly a phenomenon based on consumer expectations. Like the expectations of consumers is what creates inflation, and not inflation creates expectations of more inflation, which makes sense. So following that, he said that because in his educated opinion, inflation expectations is all that matters for some peculiar reason. He said that that's what they're closely monitoring. The fun part is that inflation expectations have been the highest they've been since 2008. So I mean, even if he's right, which is totally wrong, it's putting what is it called, the cart in ahead of the horse, right?
Yeah.
So even if he was right, which he isn't, still there is a big problem. Even if you look at inflation expectations.
Yeah. By the way, I want to say thank you, Lorraine. I really like you. She said, judging by the sound of your voices, I would have guessed that I am the youngest.
Oh, yeah.
And Steve is the oldest. I like you.
Yeah.
No, it's just my squeaky voice, basically. Yeah. Anyway, that's all I had to say. So I don't know if you have anything before we look at questions.
Yeah, let's talk about a couple of things. First of all, the S&P, just a note here, the S&P is currently attempting to break back within this little rectangle. I remind you that, that was a very little rectangle. We almost completed its downside targets, like earlier today, at least European hours, like early in the morning today. In my opinion, there is a chance that we've already seen the corrective move we were about to see. Don't forget that getting a nod from the second biggest central bank telling you in essence that don't worry, there's nothing hawkish coming your way, is a positive for global equities, which of course includes and the biggest of which is the S&P, right, and the rest of the US indices. So I think that post ECB, the market might feel easier just pushing higher from here. That of course should be somewhat negative the dollar as well, although if you're looking at the DXY, since the Euro USD is a little bit under pressure following the ECB, the DXY might remain a little bit supported, because as we've explained multiple times, the euro is by far the biggest component in the index. Now, of course, that doesn't affect in any way the cable, right? The cable had a little bit of a pullback, and it's now attempting once again to break through this descending channel, which in my opinion looks very corrective. So I think there is a good chance that the cable is about to start another move to the upside. Now, the difference in behavior today between the two of them, and this is something we haven't visited for quite some time, is producing another rejection in the euro pound, right? You can see this slow depreciation happening within this channel. This channel dates back to April, actually, to the end of April. So it's already several months that we've been in this slow drift lower, and as it seems, the market still respects this channel. So another push towards the channel's bottom is looks very likely against the 86. What is it? 86.15 high. We might have more to go here in the case of euro pound. Now, we already talked about crude oil. I didn't mention again because I keep saying it every day. Remember that crude oil is testing again and again this trend line resistance from this channel. This is definitely a pivot area. I think a break above it opens the door for new highs, in essence. So for a move above $77. Now, until we break out, there is a chance that we're going to see, more of a consolidation. But to be honest, crude remains very, very well bid, and even though it has failed multiple times during the past 4 or 5 trading days to break above, on the other hand, it's not really pulling back either, right? So you have to keep that in mind. Now, gold and silver are both backtesting the broken channel trend line resistance as support. Here is gold. Here is silver. So I think they'll have to take a decision very, very, very soon about what's happening from here, right? So we hold here and we push higher. That's a very positive sign for short-term traders. Contrary, we drop back within these channels, and yeah, that's definitely not a good sign, and it means that there is more choppy consolidation or even a bigger pullback before the uptrends can resume. Now, what else was there that had captured my attention? Oh yeah, Palladium. Yeah, Palladium. So we were talking about Palladium, and if you remember, we had mentioned multiple times the importance of the 2500 area. as an area of resistance. And I had specifically said that as long as we hold below 2,500, the path of least resistance remains lower. We did get rejected twice from there, and we now finally seem to be accelerating lower. We actually produced since yesterday a lower low, and that is definitely a bearish sign. And the break below 21.94, previous low over there, as you see. Let me move this. Is going to be a very bearish development, opening the next downside objective, which is below 2,000, right? So keep that in mind. So I think that Palladium looks like it's still in trouble. Platinum looks heavy as well, still within this descending channel. A recent consolidation, RSI, everything says that, you know, probably there is more downside before we can get the resumption of the uptrend, because I do think that we found a very significant low over there last year, more or less when the stock markets bottomed out after the COVID sell-off. I think that was probably an extremely significant, probably a generational, perhaps even an all-time low. All-time no, if we go back, you know, several decades, it was lower, but I mean, you know, a low that we're not going to see again. So I still favor very, very much Platinum for the long term, but in the short term, you know, I don't see something bullish with it as long as we trade within this channel and we don't break above it. So keep that in mind. Now, copper also still remains within a corrective consolidation. You know, a slightly descending channel here. You can clearly see it. I think that the more time we spend here without breaking down, the higher the probability that we're just breaking out and continuing to the upside. Copper looks very healthy to me if we're talking about like a medium to long-term horizon. Now in the short term, you know, still correcting, so I think you need to remain somewhat patient. And natural gas, just unstoppable. Another big up day yesterday. So far today, consolidating the recent gains, which makes very much sense. We've now tagged and surpassed the 2018 high, which I remind you brings us to prices that we haven't seen in 7.5 years. And in my opinion, there is more to go. All right, so keep that in mind. We've been saying how bullish natural gas is since we broke up there, and almost on a daily basis, the instrument confirms that bullishness. China unconfirmed 2 storms heading towards that big dam. Okay, judging by the sound of you. Oh yeah, Lorraine said that. Stelios already read that comment. Yeah, my voice was always somewhat deep and sounded a little bit more adult, but you know, it is what it is. I have no issues with that. So I think that concludes more or less the things I had to look at. So we can go over questions. Let's see. NVAX. Yeah. Still within this channel. Still looking good. Although, as I've said before, momentum is not impressive here, so that makes me believe that there might still be some kind of a bigger type of corrective move unfolding here. Just a thought, for example, right? Of course, extremely early to confirm something like that, but just a thought. This can even prove to be some kind of a symmetrical triangle, right? So that's what I think about NVAX. NVIDIA, I have nothing to say about it. It has done nothing wrong for a huge period of time. Broke through this triangle, pushes higher, currently consolidating its prior gains, but I see nothing bearish yet here. Ultimate target of this triangle is at 238.85, the 100% extension of the triangle's range. So yeah, there is nothing bearish here. Yeah, I do see the RSI divergence. Somebody can notice this, right? But we also had an RSI divergence, before, and it didn't play out. So keep that in mind. Yeah, at some point, it has to have, at some point, it has to have some kind of a deeper corrective move lower, right? But for the time being, everything looks super bullish. So, there's that. T-Tech. What's this? Tetra Tech. Okay, so that was a nice breakdown, which was very unimpressive, having to do with the follow through it produced, or in all actuality didn't produce. And there you go. We found resistance at the 127% extension. I guess 162.50 is the next target there. Yeah, it's bullish. Nothing else to say here. This previous high there at 144.70, or this previous high here at 142, might act as support in this pullback, and then we can continue higher. T-Tech, cap and handle. Yeah, not the prettiest one for multiple reasons. Not the prettiest one for multiple reasons, but you can, my mistake. But you can claim it is such. Sorry. Yeah, I would like the cap to be a little bit more obvious and, expand a little bit more in time and ideally in price as well. But yeah, you can say so. In any case, as I've told you before, against 144.70 or 142, we are bullish, looking for 162.50. Now, if you want to take the cap and handle approach, that would make the implied target even higher at almost at 170, right? So, these are upside targets, 162.50, 170, but it's definitely looking bullish any way you look at it. Even the recent spike higher had no RSI divergence, right? Look at the RSI. It did produce a higher high, actually, right? So it has done nothing wrong yet. It's looking very good. GFL. GFL. Now, you want to take the cap and handle approach. This is one also here. Right? Of course, there is also, a simplest interpretation. It's a triangle, right? In any case, both point in the same direction. And there are your first upside targets, 38.50 and 41. And FSLR.
Steve, we have a few minutes. Blake needs the Zoom.
Okay.
The Zoom thing for
Absolutely.
an interview. Took a couple of
FSL,
minutes.
yeah, sure thing. Anyhow, this is the last question. FSLR suffers from the same problems. The first stock you asked for was suffering from, meaning this move higher doesn't have impulsive characteristics yet, as the move lower didn't, which leaves open the possibility that we're still within a bigger corrective move, right? Perhaps a bigger type of triangle like this one, right? So I wouldn't be jumping being long here. Keep that in mind. Okay, guys and girls, let's wrap it up. Actually, it's not even earlier. It's like 11 minutes past.
Normal time, yeah.
Yeah,
Thank you,
it's
Steve.
normal time.
Awesome.
And, have a wonderful rest of the day. And we'll see you again tomorrow for the last day of the week. Bye-bye.
Oh, yeah. Bye-bye.